Good morning, everyone. Stock market video here. I thought I'd get this one out a little bit early. Sometimes I like to put these videos out, after the first couple hours of the day. A lot of the time, that's where a lot of the price action takes place, is in the first, they call it the first, morning session. But that's when a lot of the big positions are moved around. And then the rest of the day, volumes will dry up and the stocks will kind of chop around. So usually after the morning, you can get a good read on perhaps how the day's going to turn out. So that's why I like to put those videos out in the morning. Let's get into it. All right, Nasdaq futures. So we have this downward channel. We broke today to the upside. So in general, the look that this is giving me right now is that Nasdaq futures want to run up and tag and do a back test. The trend line that was broken. This is the trend line that was broken going all the way back to April. Several tags of this trend line walking up the, kind of upward. We broke and now it looks like it wants to run up and do a back test. Doesn't mean it's going to, but that's what it looks like it wants to do as of right now. The point that I want to make is, even if it does a back test, I'm not really interested in trying to game a back test, because this back test here, this could go up, 2%. Sure, that could be a nice trade. But the major trend has been broken here. This trend right here was broken. So to think that this big trend of this upward price momentum would just break and then, back test and maybe even recover. Yes, that's possible, but I think there's some more downside. Usually when you have such a long extended up move, you're going to have more than just a quick little blip down. And, we would have recovered this already. In my opinion, we would have recovered this trend line. If it was going to be a false breakdown, we would have recovered it already. Possibly right here, this bounce back here, if we popped back up and recovered. We've just been trading down here for quite a while. So to me, it seems like the market's kind of struggling and it wants to do a back test. But the thing is that if it doesn't do the back test and can't actually run up and back test and actually rolls over here, that would be a nice fake out, because everybody looks at this and they see it looking like it's going to do a back test. That's what it looks like it's going to do. So if it can't make that back test and rolls over and fails, then this would, I would read that as pretty bearish. One thing that gives me pause on the back test is volatility is rising. So we're seeing this again. Volatility is front running the move, or could be front running the move that's going to come in the futures. And volatility works inversely to stock. So when volatility rises, typically that means stocks are going to fall, and vice versa. And we're seeing volatility starting to rise. So this UVXY is up 1% at 1.9%. This other one, VXX, is up 1.25%. So not a lot, not big moves, but people are buying puts, basically, is what this means. People are buying protection. Volatility is a measurement of how many, basically how many puts are being bought in the market. And so people are buying puts and protecting for the downside now. So that means they're, anticipating a potential downside. We'll watch this. Now, volatility could come all the way down, like this VXX could run down, sell off, and tag, do a back test of the trend line, maybe around 22.50. But I think that would be an opportunity to add to volatility for the next pop-up. Okay, Qs. Qs has the same look as the NQs, Nasdaq futures. We had this bullish falling wedge, not a sharp wedge or anything, but it was starting to wedge out, broke to the upside. And so to me, the look that I get on this as of right now tells me that this wants to run up and do a back test. And that's a ways up there. Obviously, it could run up and, 2%, almost 3%, depending on when it actually gets there. It could be a while and could be up there a ways. But that's what it looks like. And then we'll see how it reacts when it gets to that trend line. I expect that it would fail. That would be the expectation. However, again, if it doesn't backtest and fails to actually run up and do a backtest and and rolls over, then that would be read as pretty bearish. As of right now, it looks like it wants to do a backtest. One thing though to know is a lot of the move up from the lows down here has been made actually in the overnight session. So here is the Sunday night session, the futures. From there, from the close to the open, basically moved up 1%. And then when the market opened, and here's the open to where it closed, it only moved up 1/4% right there. And yeah, about 1/4% during the regular session, and a 1%, 1.25% during the thinly traded futures market. Again, today we gapped up 1.75%, or 0.3%, in the futures, and then so far today in the regular session we're up, about 1/4. So we're seeing most of the moves and most of the participation taking place in the thinly traded futures market. So that's something to note. To me, I don't read that as bullish. Usually what I want to see in bullish price action is the market jumping in and buying the buying the move up. I want to see the large participants, the institutions, buying the move, but instead we're seeing just the thinly traded futures market moving in the overnight session. And so that is something to just read into. It doesn't mean that it can't stop moving up, and obviously technically this looks like it wants to do a back test. But what I'm saying is, if it does the back test and it continues to make, and we don't see that general market participation during the regular session, then it tells me that this entire move was made on pretty thin, weak price action. And those kinds of moves are easily fadeable. So when I see that, and if we continue to gap up in the overnight session, then I would expect that the general market during regular market hours is going to step in and sell up on this back test, and you'll see the big red candle during the regular market hours. That's what I expect to happen if it's going to do that back test. This is interesting gold bullion here. If you look at the hourly, and I've been playing with these trend lines a little bit this morning, trying to figure out any way I can make this triangle. I originally had the triangle coming off the top right here, and I had it looking something like this, but it's not the cleanest trend line, and we had the breakout, and it looks like we're doing the back test there, but that's only a couple data points. So actually what I did is move this down to about here, and that captures a couple more actual reactions. You can see here we've got reaction here, reaction here, reaction here, and there's 3. And then if this is true and what this is happening, then we had a breakout of that triangle looking bullish, and then that failed. So I don't know. Well, I need a few more data points, a little bit more time to realize if this is actually going to fail and roll over to the downside. But if that's true, then that was a breakout of this triangle. Again, my triangle could be off, so it's not something that I trust completely. I think it's good to give it the benefit of the doubt, but there's no way I can seem to make this triangle unless I go here and here. That would say that something like that, maybe. Yeah, I can't make the triangle, something like that. This is the most bullish triangle I can make right here. So and this says we broke out to the upside here, we came down and did a back test, and now we're going to hold and should start to move higher. That's what this triangle says. So we'll leave it here just to see what's going to happen. But if this fails here and breaks down, then there's no way I can make this breakout right here as a bullish breakout, and it will have failed. It will have been a false breakout higher. The dollar is moving higher as well. You can see the dollar impulsively ramping up this morning, and still holding above this flag here. So you can see this flag that we made right here. We broke out, back tested, kind of back tested again, still looking bullish. So if the dollar wants to move higher, stocks should come down. You should expect to see stocks move lower. And that jives pretty well with this back test, kind of this weak back test. And then, this back test, I'm saying it's weak because it's done on pretty low volume and most of the move is being made in the futures. So this weak price action back test, and then watch for the market come in and sell this during the regular session, sell this down with, impulsive selling, big red candle, and look for the dollar to move higher. So that's kind of the case that I'm trying to make of what I think is going to happen. But again, nobody really knows. We all have to just use the tools we have. Quick sector analysis. Nothing's really changed technically for the last couple days. XLV still this is the daily chart here. It was still rejected right here off of resistance, sold down, kickback rally. Things don't move down all at once, things move in waves. So they'll move down, they'll bounce up. They'll move down, they'll bounce up. And if, that in a bear market, that's called the slope of hope. So you fall, you give a little bit of hope, keep people in the trade basically. You fall some more, give a little bit of hope. And that's what keeps people in the trade. If things just started collapsing straight down, everyone would panic sell and bail, and that would be the end of the move. Bear markets, because all the sellers would be out of the market. Bear markets fall, but they keep people long, they keep traders in the trade, and that's why they work themselves out over time. Now, yes, it usually works. Bear markets happen faster than bull markets. Fear is a stronger emotion than greed, but they don't just go straight down. A sustained bear market will move down over time and have rallies along the way. So now, I'm not making the case here in XLV that this isn't a bear market. I think it is, because if I go back to the weekly, this is your 2009 lows and this is your rally, and we started to break that. So I look at this as all topping action right here, this price action that we've had below the trend here. But I'm not trying to make if you want to wait till it's down 20% to say that we're in a bear market, then you can do that. But what I'm saying is that all I'm trying to say is nothing has changed technically in this chart. It still looks to me like we were rejected at resistance. We come down, we have a kickback rally. We're working our way down to 97. XLF, same thing. Financials, here's your uptrend line on the daily. We broke. We've been just, chopping around below support. And, we're working our way to, build the next move. And I think that's going to be an impulsive move down. XLK, same thing. Here's your uptrend line in XLK, which is the tech sector. We broke impulsively, having a little bit of a kickback. We could even get a back test and, work our way. This could take months. Nobody knows how long it, usually when you're in a topping pattern, it doesn't just roll right over. It takes time, and it has to, work its way lower over time. So I don't expect this to just collapse like the March lows. That was really an anomaly. That doesn't happen too often. A bear market typically is just going to make it's going to make lower lows, lower highs. All right, but there will be rallies and bounces. So trend traders, you have to ride out the bounces if you're looking at capturing the major trend. And what I see is this is the trend of 2020. This was broken. Now we're going to start a new trend. And until this trend is recovered, until I see repair of this broken trend, then I have to treat this as a downtrend and just ride out the bounces. Apple trend line here. Now you could adjust this trend line all the way to the March lows, maybe do something like this, and then you could go here and say this is the trend now. And you know what? We'll go ahead and do that just to give Apple the benefit of the doubt. Apple's so important in the markets. You definitely want to make sure Apple has broken trend prior to the markets completely breaking down. But you know, this trend line didn't exist until back here, and back here I only had 2 data points. So I had the lows here, and I had this little cluster. To me, I think this is the more valid trend line. I've got several reactions along this trend line here, and right there I've got the low here. I've got this point. I've got this point right here. Here, this was a false breakdown. That was a bear trap, and it was foiled with earnings. Earnings came out and they gapped it up. That's why the gap exists, because it was a trap. That gap higher trapped all the bears right here that took that breakdown. So they gap it, they trap the bears, the bears scramble and cover, and then you ramp up. So to me, I think this is the more valid trend line. But if you want to mark it out to have just the benefit of the doubt trend line, you could mark this one out. Looks like this little cluster. We got another reaction right here. So that's we'll leave those both up there. Microsoft, clearly below trend. I mean, there's just no way I can make a trend that this is not broken. So still below trend. Just looks like it potentially is working its way up for a back test. Amazon, same thing, clearly below trend. Google, clearly below trend. So there's no way I can make these trends to not be broken. So trend is broken, the uptrend is broken. You're going to get rallies and bounces along the way, but the major trend is now broken. DraftKings here. This thing looks like it broke out yesterday. I noticed that. I haven't been in this trade. I shorted it on the break of trend right here. And it doesn't look like much, but logarithmic scaling kind of hides how much things move. But the fall here was a 28% drop from the break down to this low point here. So we captured some profit there. And then I exited the trade. And I did point out back then that this right here could be a bull flag. And it looks like it's starting to break to the upside. So if that's true, this thing might have another, a monster run to come, another leg up. And if the flag's going to play out, then, it could be another 200% gain. Sounds crazy to me, but it's possible. I don't think it's going to play out though. And the reason why is because the triple Qs and the tech sector, the fact that they broke their major trend line of 2020, I think that I think that they're going to sell off a little bit, and that'll probably drag this down with it. So this could easily be a false break higher. So I'm watching for that. Tesla. All right. So I was looking at this one, trying to figure out if this is topping out, if this is going to be, if this is the kickback move from this launch rally move right here. This is the daily chart. A lot of the times when you see this impulsive move higher, that marks the top of the market or the stock, you'll see the initial plunge, and then you'll see the kickback rally. Just look at a bubble chart and you'll see that. Here, I'll just make it easy for everyone. I'll pull it up. Here's a stock bubble chart, and this is kind of the patterns of stock bubbles. And so look, here's the ramp up, the uncontrollable ramp up, the delusion, and then you get that initial plunge right here, and then you get the return to normal bounce. So that is potentially what we're seeing here, is this delusional thing. This thing's going to the moon higher, the initial plunge, and then that return to normal bounce, and that usually is the kind of the end of the move. So on the daily, it looks like obviously this thing could go higher, but if you look at the weekly, we do have resistance right here where the stock was struggling to hold on the weekly chart, really much above this 446 level. The stock wasn't really able to close on the weekly. So if this is going to hold as resistance, and this is that return to normal move, then I'd expect it to end here. So I'm watching for that. Nvidia is interesting to me. Let me get rid of these, but Nvidia looks like it's flagging, but that flag really should end soon. You've got this kind of price action here where it's just making this flag area, should break down. But the point that I really want to point out is what it's doing against this resistance. So you can see here another pop above resistance today, and they sold it. Same as yesterday. So yesterday popped it above resistance, sold it, closed below. Today pop above resistance, sell it. We'll see where it closes. That would be 2 attempts to try to recover this broken trend line here. So this is going back to the March lows on Nvidia. And you walk up, we have a reaction, a reaction. This is a reaction as we dip below and closed above. And now we're getting reactions from below. So you can see we had a reaction here, and we're getting these attempts to recover the trend line, but the sellers keep stepping in and selling it down. So if this can't recover today with 2 failed attempts, I don't know. I'd say it probably is going to set up for, a rejection and start to move lower. Okay, I'm going to wrap up here. And the one thing is just keep an eye on volatility. I think that's important. If volatility starts to run higher, that might be forecasting what the market's going to do. And the markets, might be ready to come down. So I can see volatility chopping around or even selling off some more to do a full back test of the broken trend line here. But, we want to keep an eye on it. When volatility is moving higher and stocks are moving higher, behind the scenes, people are buying puts. They're taking protection for the down move that they think is going to come. So that's just something you have to realize, that even though it's not so much what the market's doing, if the market's moving higher, you want to see what else is going on outside of the market. Look, below the surface. Look at just something. Look at different things besides just the price action of something moving higher in order to tell you where maybe the next move is going to be. So I'll wrap up here. Thanks for joining, and I'll catch you guys on the next.